Hey everyone, so 3 years ago in 2014 I wrote a really successful article called If Quarterbacks Were Stocks. People loved it so much, so I'm bringing it back. It's nice to meet you. My name is Jeremy Alexander Newsom. Why would I do this? Well, honestly, I'm doing my best to get people of all ages from all around the world, all experience levels, interested in the stock market. My company's name is Real Life Trading, and the mission of our company is to enrich lives. We do that by teaching people how to safely and properly invest in the stock market, how to day trade. We teach people how to make money while they sleep, pay off debts, and accomplish true financial freedom. And we do that entirely for free. Don't believe me? Check out that video right there, go to our homepage and see what Real Life Trading is all about. So just to reiterate, in this video, I'm comparing quarterbacks to 2017 to some stocks in the stock market, both of which you can take advantage of, but this one, the stocks, is going to be a financial opportunity for you, so pay close attention to the video. I'm going to be talking about which quarterbacks and stocks might be breaking out this year. I'm also going to be talking about overvalued. I'm also going to be talking about undervalued. And I'll be discussing at the very end who I think is my pick to win the Super Bowl for 2017. You're going to love it. Let's start with the worst of the worst. The bottom of the barrel, lowest tier, living on the waiver wires in fantasy football, possibly going 1-11 quarterbacks and stocks. Up first, we have Tom Savage of the Houston Texans. Amazing name, but pretty weak arm. Unfortunately, Houston is just recovering from an absolutely devastating damage with Hurricane Harvey just a few days ago, and we all know that team is going to really come together this year, so I'm excited to see what ends up happening, but Tom Savage is going to be fighting a pure uphill battle and probably is really going to be overwhelmed. It's going to be interesting to see exactly how he does. His stock comparison, Twitter. Massive expectations, a lot of people love the company, a lot of people use it, but they are still struggling from poor revenues, poor ad services, and their stock just can't seem to catch a break. Staying in the abysmal AFC South, Blake Bortles has been an absolute turnover machine. He's regressed big time, and even with a strong wide receiver core, the Jags can't seem to win any games. Kind of like 3D systems. It's explosive, it works, but rarely. While 3D had an amazing 2013, it is quickly returning back to normalcy after its massive resurgence. I can't properly make fun of football players or teams without bringing up the Browns, a die-hard fan club, and not the Bruce Willis kind. We have Deshaun Kaiser standing at 6'5" and 220 is pretty much a tree with arms. One of only 2 rookie starters presently of 2017, he is going to be fighting a really difficult challenge. Can we say Johnny Manziel? Deshaun is going to be the CHK of the stock market. A stock that everyone is desperately pulling for, including myself and Carl Icahn. At this point, we're all trading it on hope, hoping and desperately praying that the stock can actually bounce, but right now it's having a really tough time. Who do you think I'm going to choose for Snapchat? Arguably the worst, most overvalued company in the US markets right now, in my opinion. The Snapchat comparison is going to be Josh McCown for the Jets. Sorry Jets fans, but your boys will likely be the worst team this year and they could probably go 0-16. They are in full rebuild mode. Kind of like what Snap needs to do. In order to measure up for its $18 billion valuation, Snapchat needs to start seeing people buying off their ads and actually generating revenue. Next, we have Mike Glennon starting at 6'6", being backed up by one of the worst quarterbacks of all time, Mark Sanchez. The Bears are going to have it pretty rough. Mike has played 2 games in 2 years and pretty much basically none in 2015. In my opinion, Mike is the Nokia of the stock market. Now, granted, year to date, it's up 50%, but it's Nokia. At this point, the company is pretty much just relying off of its royalty checks and its patents. Next, we have the Rams with Jared Goff. He was the #1 overall pick in 2016. In 2017, his projections are weak and full of uncertainty. True, he walks into some very difficult situations and he looked great preseason. He has a healthy Sammy Watkins to throw to, but it's the Rams. His stock comparison is gonna be RIG, ticker symbol RIG. This was a stock that I also really thought was gonna be a star back in 2016, but it just never really turned out to be what a lot of us hoped. Now, let's talk overvalued, overbought, due for a pullback. This is going to stir up some controversy, and that's okay. I'm either gonna be really wrong or really right on this one, but that's all football predictions, right? Dak Prescott for the Cowboys was hotter than a $2 pistol last season, making an incredible playoff run and finally dethroning the terrible toothpick Tony Romo. But in my opinion, Dak is like Take-Two Interactive. This stock has surged an ungodly 1,000% in the last 5 years and has quadrupled in the last 2 years. I mean, look at this chart. It's a healthy trend, an amazing quarterback, but a pullback is more or less imminent. On to one of the highest paid NFL players, Derek Carr. Derek, although an amazing player, is coming back from a horrible injury and at a brand new stadium with new fans. This just seems a little bit like a nightmare. Kind of like Activision Blizzard. Exact same industry and direct competitor of Take-Two Interactive, Activision has grown about 600% in the last 4 years and has doubled in the last 2. Due for a pullback soon. We need to figure out exactly which stock is going to pull back first, Take-Two Interactive or Activision Blizzard. Both the Cowboys and the Raiders will be playing each other in week 15, so we get to see these need a pullback quarterbacks battle each other in that week, and we'll figure out who wins. Cam Newton was pure fire when he entered the NFL, but coming off of a post-season shoulder surgery, he will be a little sore, and he certainly will not be running as much, and those big hits are starting to take a toll. He handled his first Super Bowl loss against the Broncos pretty poorly, and the media just absolutely shredded him. Last year, the Panthers weren't that great, and I expect an average performance out of Cam this year. 20 touchdowns, 10 interceptions, and 2 rushing touchdowns is kind of my thought. That's why Cam Newton is my Qualcomm. Qualcomm was in pure rage mode from 2010 to 2014, gaining 100% in value. Since 2014, it's regressed almost 50%, and it is technically in a good buy low spot, and Qualcomm has okay fundamentals backing it, but will this be a breakout year or a continuation of the regression? All right, so we're chatting injured quarterbacks here. Timetables are a little bit iffy. Maybe some start, maybe some don't, but let's just talk about it anyway. Replacing Joe Flacco, who has no timetable for his return, the Ravens will feast their eyes on Ryan Mallett, who is barely worth mentioning in this video. Ryan Mallett is the medical marijuana of pro football. This is an entire sector that just excited investors the world over, only to leave them high and dry when it came to their portfolios. Speaking of another injured quarterback, Andrew Luck with the Colts will have the unprepared, non-battle tested Scott Tolvien, who is just fully out of his league. Figuratively, but not literally, as he's actually in the league getting paid millions of dollars while I'm just an ugly guy with a huge head and no sense of smell making fun of him. Scott Tolvien is the blue apron of the NFL. There's a lot of competition. Everyone knows exactly what it is, but very few people actually want to pay for it. Let's hope Scott can fare better on his start than Blue Apron did since his IPO, when Blue Apron lost over 50% of its value once it came onto the US stock market. Replacing Ryan Tannehill, who is out with a torn ACL, we have Jay Cutler. Jay Cutler is a very high risk but high reward candidate in 2017. He has good fundamentals, he is working with his old coach, and he has an amazing running back. This offense has everything it needs to be a good and surprising move for its Fin fans, but Jay Cutler does have some age on his side, making him a great comparison to WWE. That's right, the World Wrestling Entertainment. Did you even know it was publicly traded? If you didn't, you might love this article where I talk about sports companies that actually are publicly traded on the stock market. Now, over the last 10 years, WWE has only increased approximately 30%, but that's after a 50% tumble in about 5 weeks back in 2014, and then over a 100% climb since that time. This stock does pay dividend and looks like it's ready to slowly creep back to its $32 all-time high area, which leaves a 50% growth to the upside from here on WWE. Fin fans, I'm excited about your team this year and I'm liking what's going on. I would have a lot of great things to say about the underrated Tyrod Taylor, quarterback of the Buffalo Bills. But he got injured and it's questionable if he plays in week 1, week 2, or his timetable at all to play this season. So this one, I'm going to kind of blend both quarterbacks for the Bills. They definitely have some solid upside. Rookie Nate Peterman and Tyrod Taylor. Nate Peterman played pretty good this preseason, but he will likely be a bench player if Tyrod returns because he is just purely a workhorse and will refuse to sit out if he's healthy. Only time will tell who takes the starting role between the two, but I'm going to be blending both quarterbacks and comparing them to Momo. Momo is a high-flying social media app better known as the Chinese Tinder, which just recently slaughtered earnings. This is a very volatile stock, but offers incredible trading opportunities for those who are brave enough to trade it and for those who have learned how. All right, let's chat medium grade, normal, average quarterbacks who are millions of light years ahead of where I am in throwing the football. Alex Smith, quarterbacks for the Chiefs. We have here a low risk, low reward quarterback. Playoffs are possible, but that's it, maximum. Will you lose everything if you own Alex Smith? Nope. But Pat Mahomes is certainly breathing down his neck to take the starting spot. Right now, I feel Alex is pretty solid. That's why he's my silver. Ticker symbol SLV. It's low, it's flat, you get what you see, everyone knows what it is. Is it going to go down much lower? Probably not. Is it going to go up a lot higher? It's going to take some time. Next, we have the Red Rifle, Andy Dalton, the steady Eddie of the league. He probably will be a top 12 fantasy quarterback this year. He's often overlooked, certainly not sexy in any way, literally, but he gets the job done. Kind of like Bristol Myers Squibb, a solid dividend-paying pharmaceutical with a recent propensity for wild swings, dropping 50% in 2016, but only after tripling from 2010 to 2016. And BMY appears it's ready to pop with some decent upside ahead of it. Of course, no quarterback list of averages is complete without talking about Philip Rivers of the Chargers. The man can do it all except win a championship. A less cool, less dynamic version of Dan Marino, Philip is a consistent upper tier performer every year. If Philip Rivers was a stock, he would be US Steel. He's been around forever, he has large ups and down swings, but US Steel is consistent, it pays a dividend, and is a very exciting and fun stock to trade, especially in the short term. Long term, however, it has a pretty upsetting career. On to the Denver Broncos, led by quarterback Trevor Siemian. It is a pretty similar comparison to Alex Smith in that he's low risk, low reward. Trevor is a very smart, cerebral quarterback and plays the game to his strength. Reads a lot of tape, but he has never fully proven himself. I would compare Trevor to a REIT, a real estate investment trust of some kind, like IRM, Iron Mountain, which looks a little bit like this. It pays a dividend and trades in an amazing and very easy to trade channel, but how high is it really going to go from here since it looks to pretty much be at its peak? Only time will tell. Our Georgia boy, Matt Stafford, quarterback of the Detroit Lions, will probably end up throwing a touchdown per game this season. He's usually pretty solid and reliable, but his overall performance is weak. Kind of like IBM. Everyone knows who they are, everyone knows what they do, they're an easy investment, and they do go up sometimes, just not very often. I mean, seriously, if you bought IBM in 2000, not including dividends, you might be up 10%. That's pretty rough, and another reason why Warren Buffett dumped them a few months back. For my Viking fans, your leader is Sam Bradford, who really doesn't have the stature or mobility to be a great quarterback. Definitely a lower tier quarterback who had an incredible college career, but his NFL career has been C- at best. Kind of like Etsy. This is a young, fresh company which should be producing massive results and still could. Everyone likes the stock and the company, but since its first step on the field of the stock market, Etsy has dropped about 70%. Personally, I think Etsy is a great buy low, sell high, offering a sexy space for investors to invest in a personalized e-commerce store at a cheap price. Similar to Etsy, let's see if Sam Bradford catches fire this year in a good way, not in a bad way. Eli Manning, an absolute incredible quarterback. He is going to be taking the lead for the Giants this year and looks a little bit shaky. A battle-tested pro and an absolute veteran who is starting to age and become a little bit obsolete. If you have him on your fantasy team, he will certainly get you some points, and he's going to throw a dozen or so touchdowns. Eli has an amazing cast around him with one of the highest paid players in the NFL catching every pass thrown his way. Eli has had some success, but with his brother retired, his legacy intact, you have to ask, what's next? If Eli were a stock, it would be Ford. Yes, it pays dividends, but its heyday has come and gone. There's no one out there bragging that they have some shares of Ford in their portfolio. It's just a good old American company that ain't really doing much no more. Brian Hoyer for the 49ers has played for multiple teams and rarely gets any love. The 49ers have a great offensive coordinator, and Brian is better than what people think. Granted, the 49ers have struggled the last few years, but this could easily be a turnaround season for them. I'm expecting Brian Hoyer to outpace expectations and projections, which aren't very much, honestly. If Brian were a stock, he would be Garmin, a stock in a company that survived an 85+% sell-off during the market crash of 2008. This company has revamped their model from just car GPS systems to maritime and aerospace products, which has helped their company stabilize a lot. Garmin does pay dividends, surprisingly, and it's been around for a while. Still over 110% lower from where it was at its previous all-time high. This could be a sleeping giant that slowly grinds its way higher in a very Trent Dilfer kind of way. This is probably the part of the video that you skipped ahead to. Why? Because you could make a lot of money in this section if you know how to take advantages of the move. Make sure you watch some of our real-life trading videos for free to learn how to trade the stock market properly and safely, make some extra income, pay off those debts and bills, become financially free, and travel the world just like you want to. All right, so the breakouts. First up, we've got an oldie but a goodie. With Carson Palmer, who is an NFL dinosaur at 38 years old, looked amazing the last few years. An underrated quarterback with an easy schedule this year. I'm excited to see if the Cardinals, who are fully poised with veterans, are ready to fly higher with all of their experience on the field. Or they might just get too tired for the job. If Carson Palmer was a stock, it would be Yum Brands. If you've watched football, I can guarantee there's a 100% chance you've eaten either KFC, Pizza Hut, or Taco Bell before at some point in your life. In fact, I had some last night. Yum Brands is a massive conglomerate, and when I was in Germany just a few weeks ago, I saw KFCs everywhere. This stock is presently at an all-time high, but with a soft, easy pullback and a retest, I could easily see this dividend-paying stock continue to climb and soon break out into the triple digits. Up next, we have Marcus Mariota with my hometown Tennessee Titans, located right here in Nashville. If there is one word to describe Marcus, it would be efficient. In his NFL career, he has thrown 37 touchdowns and 0 interceptions in the red zone. That's just smart football. With a solid running back core and a better defense this year, I think the Titans are a real sleeper team. With his efficiency and overall cool demeanor, on the verge of a breakout, Marcus is a lot like Honda Motors. Coming back from the football field, guys, this is Honda, right? We've all driven one or owned one at some point. I think this is a very smart play, buying it below $30 when it was only at $41 just a few years ago. And now, we've made it to the blue chips, the solid stocks, powerful performers, and wonderful companies and quarterbacks. These companies are ones that hopefully any financially literate person has at least one of them in their portfolios, and these companies and quarterbacks pretty much everyone knows about. Obviously, the stock market has been on a majestic bull run for the last 8 years, and yes, the markets will have a small 5 to 10% pullback here pretty soon, but that dip will be very viable in my opinion, and these stocks should continue doing exactly what they've been doing for years, creeping on a little higher. Matt Ryan. He was my 5th or 6th round draft pick in fantasy football this year and had a monster performance last year, losing in his first Super Bowl appearance for himself and his franchise. Matt is steady, smart, and he's hungry. Back in 2014, I compared Matt Ryan to Coke, the most recognizable brand in the world. Not a bad comparison since they're in Atlanta. That was back when Coke was at $38 and now it's at $45, almost 20% higher. So I'm going to keep Matt as a Coke comparison. Coke's going to do what it does, slowly go higher, paying dividends, and I do expect the Falcons to reach the playoffs this year. Drew Brees. What bad things can you say about this guy? Not many, unless he prefers pancakes to waffles and doesn't like crunchy peanut butter. My comparisons to Drew is Netflix. He's a Super Bowl victor, but he's also tasted defeat. Netflix is a wonderful company cranking out plenty of amazing and engaging content, and they're just scratching the surface on how many active users they will have. Think about it, 10 years from now? It's a volatile but incredible stock to own. My girlfriend owns some of the shares, and if you have a Netflix subscription, be an owner, not just a buyer. Own some shares of Netflix. A simple $100 investment in Netflix 10 years ago would have garnished you over $111,000 today. That's wild sauce. Is it too late to own Netflix now at $174 a share? Nah, no way. I like it. Love Netflix. Let's keep trading it. And Drew Brees, you rock, man. Ben Roethlisberger, a seasoned veteran with 2 of the best players in the league at his support. I could probably be the quarterback of the Steelers this year and we would make it to the playoffs. All Ben has to do this year to win is stay healthy and stay out of trouble. He's great at home and bad in away games. Back in 2014, I compared Ben to Under Armour, which grew about 100% the next year. I know how to pick them, folks. So this year, I'm going to compare Ben to Nike. An easy to buy, dividend paying company that performs year after year. Granted, for the last 2 years, it's been in a sideways distribution phase, but I can assure you this won't last long. Nike is in a prominently placed buy low, sell high type of position. A great company and wonderful stock to own. Long term, Nike will run higher. Russell Wilson of the Seattle Seahawks is another incredible quarterback who's looking to bounce back a little. He certainly had a bit of pullback last year, but most teams and quarterbacks do after winning a Super Bowl and then losing a Super Bowl. That's why Russell Wilson is going to be my CarMax. Let's talk about how CarMax quietly increased 700% from 2008 to 2015, and then they had a pullback of about 35% to a really easy and super obvious support price and has begun to bounce. CarMax looks like it's ready for this trend to simply continue in its bullish fashion over the next 5 to 8 years. I like this company a lot, and I like it even more if they buy out or merge with the previously mentioned Carvana. Just a rumor, nothing's final for sure on the street. Green Bay has had an amazing history of wonderful quarterbacks, and Aaron Rodgers is no different. I mean, solid in every way. Pure veteran, he won't let you down any year that he's on the field. Probably even wins another Super Bowl in his career. In 2014, I compared him to Amazon, and we all know how that worked out. This year, in 2017, I'm going to compare Aaron Rodgers to Apple, the biggest, most profitable company in the world and in history. And now we have the Tom Brady. No conversation about quarterbacks ends without his name coming up. At 40 years old and winning 5 out of 7 Super Bowls he's played in, many people ponder what's left. Well, anything and everything. Can Tom win another Super Bowl? Yes. Will he? There's a wonderful chance. I'm a big fan of Tom, not because of his winnings, but because of his dedication to the craft. So, I'll compare Tom to a stock that has seen no real fluctuations and has been around for decades. Tom Brady would be the Berkshire Hathaway B-class shares. I say B-class because there is an A-class and they trade for over $250,000 per share. Berkshire, of course, is owned by one of the world's richest men, a name we all know, Warren Buffett. Berkshire Hathaway Company is a solid and steady bullish machine since 1996. Of course, it pulled back in the market dips of 2000 and 2008, but the trend is your friend with this one, And I wish Tom Brady was my friend. Ladies and gentlemen, thank you so much for watching this stocks to quarterbacks comparison. I hope it was enriching and beneficial for you. Now, my Super Bowl pick for 2017. I agree with my good buddy James Matthew Fox, co-commissioner of the league, La Masters. Green Bay this year likely is poised to win it all. I doubt the Patriots can do a repeat, but it's very likely and viable. It's going to be a fun season regardless, and it's going to be an incredible opportunity in the stock market the next few months. Folks, I would love to teach you to take advantage of the market, make a lot of money, pay some of those bills, take some more vacations, and spend incredible time with your family. Thank you so much for watching this. You are incredible, and until next time, remember, love life, live life, and trade it. You rock. I'll see you later.